Once again, a very good afternoon, everyone. Thank you for joining in for today's webinar. Topic for today's session is Law Society Bookkeeping Compliances. It's a CPD, it's a 1-hour professional and CPD credits are available. Link for the attendance is being put in on the chat window. We'll be providing it every 15 to 20 minutes once. If anyone is having any difficulty hearing me, I request you to use the phone audio. And we also have our support staff on the call here, so who could help with any chats. Request you to keep any of your questions to the Q&A session, which would be right after the presentation. Questions are welcome, but we'll be providing answers once the presentation is done. Thank you so much once again, and let's get started as it is. We have 5 minutes on here. The presentation would end at 3:05. As you all are seeing here, this topic is a little intense on Law Society bookkeeping compliances. We're going to talk about various procedures on how you could keep yourself compliant with Law Society, just not about from the client and the matter management aspect of it, but also with keeping in mind the financial management and accounting compliances to maintain your books. Now, many of us think it takes a lot of time to do this. Some actually takes a lot of time to do this. All the ledgers and journals and reconciliation documents and other compliances included in it, fee book and stuff. But then some of them do not take more than a few minutes to do this. If you're doing this on a monthly basis, weekly basis sometimes, it's typically not a very difficult task. So we're going to see today what it takes to get to being compliant with Law Society from the bookkeeping standpoint, and how long it should take you to do that, kind of how much time you need to spend, what needs to be done, and so on. The agenda for this webinar here is that we're going to look at different types of ledgers, mainly focusing on trust in the general ledgers, and what are the kind of information that needs to be recorded while you're recording a transaction, so that these details, these minute details, can be recorded in the transaction while you're adding them into the program, and that is then later provided to you in the form of an output or a ledger. So basically, if you need a document to be submitted to Law Society, what are the details that needs to go into that transaction or that documentation is what we're going to see today from the Trust and General Ledger perspective. Likewise for the journals, there are 4 types of journals, 2 types of ledgers, 2 reconciliation documents, 3 if you have a credit card, and other documents such as Form 9A, deposit slips, fee book, and we're going to be seeing most of the other documents that forms part of this bookkeeping compliances. So keeping in mind that these are the required documents for your monthly compliances, we're going to be seeing how to get started with it. Now, it's very evident that each one of you would follow one of the bookkeeping, systems. Either one has a manual method of maintaining it on an Excel spreadsheet. Today, no one's writing it down on a notebook, on an accounting notebook, or whatever you call it, as a piece of paper, whatever. So today, everything is computerized. Worst case scenario, you're using an Excel spreadsheet to manually record the data, or you are probably using a accounting software, or you're using a legal accounting software like uLaw. which will allow you to integrate with both your client matter management and accounting at the same time. So whatever could be the method or the model that you're using, keeping in mind that the transaction that you are incurring, or the transaction that you are rather coming across, should definitely contain certain information. May it be the date, the amount, the method of payment, the description. These are some small, minute details that are captured as a bookkeeper. Now, you are not a bookkeeper, which I understand, but you are required to fulfill that role, obviously, because if you're a sole practitioner, if you're a new entrepreneur, if you're a small business owner, you are more trained to wear different hats, and one of those hats are bookkeeper hat. And let's say you or your own bookkeeper, whoever, you might have hired someone, you might have outsourced the work, but end of the day, bookkeeping has to be a vital role. It plays a vital role in your accounting section of the program. And it goes hand in hand to provide you the ledgers, the journals, the reconciliation documents that you need. So it all starts off with the determining a model that you are probably going to use, whether it's a spreadsheet software or a general accounting software or a law firm accounting software. Choosing the system and making sure that it works best for your practice, and adding relevant information into it, and making sure that your books are up to date from time to time. These are certain good practices that Law Society would like to see, obviously, because when you're entering your data from time to time, you are going to end up with the required outputs that obviously whether you need or your client needs, or whether Law Society needs. Today we are focusing on Law Society bookkeeping compliances, so I'm not going to deviate from the topic, but to just keep in mind that whatever you're recording into the respective model that you're using would help you to later provide all of the respective documentation for Law Society bookkeeping compliances. So there are advantages and disadvantages overall, but trust me, with a legal accounting software, you're gaining a lot more than you would think. As it is, you're compliant with Law Society by doing your monthly reconciliations, journals, ledgers. Obviously, you're not doing all the work, but you're only providing us with the inputs, so the outputs can be provided to you in the form of these documentations. Now, what are these documents? There are 2 ledgers, there are 4 journals, there are other documents such as deposit slips, and there are Form 9As, there are fee book, and other documents that you would need to submit to Law Society. Now, we are going to see those in the upcoming slides. If you're all seeing a little bit lag on my screen, apologize. There is some sort of issue with my screen sharing right here, but I'm sure it might take about 10 to 15 seconds for you to see my screen. Currently, I'm sharing the screen on what are ledgers. So we're going to see what are ledgers. Now, a lot of us know that reconciliation document is the document that you need to keep yourself compliant with Law Society. But in the process of completing the reconciliation, or in the process of, doing your monthly reconciliations, there are other documents that forms part of it, which are also necessary for you to be compliant with Law Society. One such is these ledgers. Now, as you see here in this particular screen that has both trust ledger and a general ledger, a general ledger provides the details of a client after you raise an invoice, right? this is what you have raised as an invoice, because obviously when you raise an invoice, there is an AR created. And when you receive a payment against that AR, there's a respective respective credit to the debit provided there. So end of the day, when you're taking a look at both these ledgers, likewise for trust ledger, there's deposits, there's withdrawals, which is retainer as deposits, withdrawals as disbursements or trust payouts or trust transfers. These are to be recorded in the respective client accounts, which then gets transferred into these ledgers, or which then gets recorded into these ledgers. One or both of them, if you are having both trust and general, I'm sure there would be both the ledgers showing up. So each ledger has its own particulars. It has the date, now the amount, and sometimes even the reference numbers, depending upon what ledger you're trying to download. Like, for example, if you're downloading a general ledger, there'll be a reference number of the invoice number to understand what is the invoice number, what was the payment made on the invoice number, etc. And when you're looking at the samples that is provided here, you could see that there's a corresponding date for every amount that you have received, and there's a corresponding running balance to it. Now, when there's a $40,000 that came in as a receipt for the mortgage advance, as you're seeing on the left-hand side of the client's trust ledger, there's a running balance, and as you have taken that out to transfer to maybe a vendor's lawyer or a third party, whatever, you would see a disbursement and the balance becomes zero. Over here, then, you also see the ledger provides a little overview of the data. And as you take time to maintain them, you're also simultaneously recording the data without your knowledge to be, entered into the journals, the respective journals, because obviously journals are a little bit more of drill down data of ledger. So where you have a client's trust receipt journal, then there's a disbursement journal, then there's a general receipt journal and a general disbursement journal. So while ledger shows both receipts and disbursements, journal shows only one type of activity, which is either a receipt or a disbursement, and either for trust or for general. That's why we have 4 of the journals and 2 of the ledgers. So ledger is more of a higher level sort of information, and journals are more of a detailed or a drill down version of it, where you not only see the particulars, date or amount, but if you're seeing there are 2 more additional information that you see here. One is the method of payment. Another one is the source or the person to whom you're paid, which is the received from or paid to information. Now, when you're adding a transaction into the software you're using, many times they ask you as to, let me know who you're paying it to. Let me know who you are receiving it from. Basically, the receiver and payer details, or the receiver and pay details. So we want to know that so that we could produce these documents with more meaningful value to it, right? Because a lot of us skip the part of those, those details, received from and paid to and whatever, because end of the day, it is a matter of 10 seconds to you, but it goes a long way, because these journals are technically law society compliance documents. Many of us do not pay attention to it, but trust me, if you pay more attention to it by spending 10 seconds to add in each and every line item while it's asking you for the method of payment, please provide the right method of payment. Many times people use check, but they give like electronic fund transfer or email transfer or vice versa. And the transaction details, whether there's a reference number or whether there's some sort of key to it, please try and enter them, because again, those form part of the method of payment with the reference numbers, which gets transferred into those journals later, and also who you have received it from or who you have paid it to. So these three details are most of the times ignored or missed or providing less weightage to it. But if you enter them, you get a complete document rather than an incomplete journal which doesn't have either a method of payment or the reference number or the the receiver pay details, etc. So when you are looking at these samples, look at how clearly it demonstrates each and every field that needs to be paid attention to. Now, this is a level of bookkeeping that needs to go behind whatever you're doing. Now, when I am explaining it in a little elaborate manner, it can be, sometimes overwhelming to you. I'm not denying that aspect, but trust me, each of these field items that I was talking about doesn't take more than 10 seconds for you to enter it into the respective software you're using. So end of the day, you have a complete journal, which is more important. So journals are records, remember, of a single type of activity, only either a receipt or a disbursement. Now, on a day-to-day basis, I don't know how many of you pick up a journal and use it. Sometimes the client wants to know what they've paid for, what they have spent, was there any disbursements. So they would like to understand. For them, you could provide a ledger copy because it has both receipts and payments. But maybe when Law Society auditor, or let's say you're being audited, or let's say you want to submit your documents to Law Society for some reason, they would ask for more of journals because they want to see a drill down version of what exactly happened in there, and it's more helpful. And that's one thing. And the next thing here is the reconciliation documents. Now, when we're talking about, so far we've looked at 6 documents, which is 2 of the ledgers, which is the trust ledger and the general ledger, and then the journals, which is the trust receipt journal, trust disbursement journal, general receipt journals, general disbursement journal. Moving on to reconciliation. Now, this is, again, a little panicking activity to many of us, but trust me, if you're, again, in lines with your data entry and bookkeeping compliances and keeping up with your books regularly, a reconciliation is just a 4 or 5 step process. You are not spending too much time trying to do all of this yourself, but because you've already done the preliminary works before. Now, all that you're going to do is, it's a simple accounting procedure which demonstrates that all the transactions you have added in are right or correct. And you want to take a look at it alongside with your bank statement, which is more important, and make sure you have the right set of bank statements. Like, let's say you're trying to reconcile August. Right now we're in September, and you're trying to reconcile August, and you shouldn't be having your July statements in hand. I'm sure that many of you have tried reconciling your accounts before. It's nothing new, but some points to make it easier for you is definitely have a right set of your bank statements, making sure your bank balances are matching so that, you bring up a balance as per the bank statement into the program you're using. Then you compare it with the transactions you've added. Sometimes they can be outstanding checks. Sometimes they can be outstanding deposits. you would have forgotten to either deposit a check, or you would have your vendor could have forgotten to deposit a check. So they could be outstanding checks, outstanding deposits. You minus them, add them, and if there's any bank error, you make sure to bring that to the notice of this reconciliation period, and you're arriving at a trust reconciled balance of what is actually the balance, what has to actually be the balance as per the books when in comparison to balance as per the bank statement. This accounting procedure mostly helps you to understand whether you're doing your monthly reconciliations from time to time. And this is also going to bring in a trust comparison, and you're going to be able to do the keep a track record of recording of all your checks. You need to keep a track record of all the checks that you've issued, all the checks that you have deposited, or rather you have not at least deposited. You have a pile of checks that, let's say, you haven't deposited, it's lying in your drawer, you need to take them to the bank, but for some reason you weren't able to go. So that is one of the reasons why you have to make sure to keep a track record of all of those checks. Either you have issued and they're outstanding, or either you have received and not deposited. And other than that, of course, you go through your records every now and then. Your statements has to be observed every now and then. When I mean every now and then, at least on a weekly basis, try opening your, today everyone has access to online banking. So let's say you open your online banking and you find out what are those statements that needs you to, probably keep a track record of any bank errors or any deposits, any withdrawals, so on and so forth. But in the meantime, what would help you to basically keep a track record of reconciliation is that you need to make sure that you have a right track record of all of these checks written down somewhere, maybe in your software, or maybe in a Excel spreadsheet, or maybe you have a physical copy with you, whichever works simpler for you. Please make sure that, so that when you're trying to reconcile, you can quickly verify those details that you have of those outstanding checks, and you'll be able to clear them off or unclear them accordingly. And besides that, I think reconciliation also allows you to provide a trust comparison from with your total unexpended balances, and you also arrive at a trust listing, which means many of them do not know that a trust listing is a continuation of the reconciliation statement. Each software works differently. In uLaw, it's just a continuation of reconciliation. When you do a trust reconciliation, I think the second or the third page, depending upon the size of your reconciliation statement, would have a client trust listing, which means that is what is the balance as of the date, and each client has a balance in the trust account with the last activity date, which would be the date of reconciliation. And besides that, it also provides you room to rectify bank errors. You can always talk to your bank and find out what was the issue, why was there an error, and if it was really a bank error, your bank needs to replenish that amount into your trust account. If it is your mistake, somehow, let's say you transferred more funds from trust to the general, or vice versa, depending upon whether it's a negative bank error or a positive bank error, you will need to address that issue immediately within the week's time, so that it can be rectified by moving the money out of trust or putting it into the trust, depending upon negative or positive error respectively. And lastly, if you miss to notify or notice rather that there was an error and you didn't check with your bank for some reason, the month has the month has ended, and you have no way but to choose a bank error option. So you either find out what is the bank error and make sure the bank returns it, or you put it back into the trust. So until then, you show them as a bank error. Now that's about the bank error. So don't panic when there's an error. It's rectifiable absolutely, but try avoiding bank errors by providing standing instructions to the bank saying that any admin charges, any e-transfer charges, any bank charges do not go out of the trust account. They happen to go out of the general account. And of course, it depends on provinces to provinces. Most of the provinces treat money taking out of trust account as a bank error, unless and until if you're, let's say, if you're from Alberta and you are allowed to use a kind of a floating money into your trust account, you have float money in your trust, and you could utilize that portion for it. But most otherwise, people try to give a standing instruction to your bank to not take out any additional money from your trust. So any additional charges other than the client fee, etc. So they are then taken out of the general account. Now that's about that reconciliation. Yes, we spoke about the trust reconciliation, not the general. General, same lines. Only thing is that there's no bank error concept in the general account. They're all they're general bank transactions. So most of the times they're more of office expenses, rent, taxes, and other common expenses that needs to be kind of recorded from time to time. Reconciled, so many of us think trust reconciliation is only the compliance issue if you're not the general. But if you all notice that compliances are requiring you to also complete general reconciliations from time to time. I know unlike trust, there's no deadline for general, like every 25th of the month that you need to reconcile your general account. That clause is not there for general, but at least you need to reconcile your general from time to time too, because you never know when you're going to be audited or when you're going to be needing it. So also not from the bookkeeping standpoint or compliance standpoint, but from a general firm standpoint, I would always suggest you to keep a track of your business health. You really need to do your bank reconciliations for both trust and general from time to time. That would allow you to definitely know where you stand. It gives you a true picture. It gives you an idea, because obviously you will know that, let's say you have $10,000 sitting in bank. So that's what the bank balance shows. But there could be $5,000 of outstanding check. Tomorrow someone goes and posts it. Then your real picture is only $5,000 as a bank balance. But today you might be thinking, okay, you have 10,000. So this is why a bank reconciliation is needed. Your bank balance could be different from what a bank reconciled balance is. So this is why you're asked to do a bank reconciliation first of all in place. Okay. Now that's about the reconciliation. So far, how many documents have we seen? We've seen 8 of them, 2 of the ledgers, which is trust ledger and the general ledger, 4 of the journals, which is trust receipt journal, trust disbursement journal, general receipt journal, and general disbursement journal. So that makes it 6, with the additional 2 of the reconciliation documents. Makes it 8 overall, which is trust reconciliation and general reconciliation. Of course, there's another reconciliation document, which is the credit card if you're using a business credit card, which is also called as a general reconciliation document, which comes under general itself. So we don't kind of use a terminology called as a credit card reconciliation statement. But if you are using uLaw, again, you would see under reconciliation, there's general reconciliation. If you drop down the menu, you would see there's a credit card reconciliation provision provided to you. Let me take a quick pause before I move on to feedback to see if there are any questions. Again, many of you asking whether it's a professional firm or a substantiative CPD hours. We do not provide substantiative CPD hours. uLaw only provides professionalism CPD hours. And this is entitled for 1 hour of professionalism CPD credits. And the topic is Law Society Bookkeeping Guidelines. And there's an attendance link for CPD session. Please do click on it. Everything is being posted on the chat window here for you all. At any time, any questions, feel free to enter it in there. Like I said, I will finish the presentation and would love to answer all your questions. So quickly moving on to the next one, which is fee book. And over here, now, what is the difference between all of these ledgers that we saw so far and the fee book? One, yes, fee book records all the invoices and disbursements. So you're technically not needing to see all those retainers, payments, disbursements, and, as invoices to be recovered from the clients are the only motive for you to see these fee book information. Now, what goes under a fee book? Number one, the date of the invoice number, who it was invoiced to, which is the client details, the amount of the invoice, whether there's a fee component in there, whether there's a disbursement component in there, whether there's a HST included in it, or GST or PST, whatever, basically tax is inclusive, tax is exclusive, or taxes exempt, and the total. All of these columns are what you're going to see here, and I think you might be able to see that on the sample below. And now, most of the information here is pretty automated. This particular fee book is auto-generated, and the information in it mostly are auto-generated too, but there's one thing you have to keep in mind while raising an invoice. Actually, a couple of things, I would say, from a bookkeeping standpoint. Number one, to differentiate between your legal fee and disbursements. I don't know how many of you do this religiously, but if you've not been doing it, please start doing it. Because when you raise an invoice to a client, not everything needs to be a legal fee. A legal fee is then when you're unnecessarily hiking your legal fee, which will then show as if you have more income, and also the HST would be taking a hit, while you actually differentiate between a legal fee and a disbursement. This will help you to show as a legal fee charge to the client, which is your revenue, actual revenue, and recovery of expenses, which are these disbursements. Of course, disbursements are to be recorded as disbursements because they are expenses incurred on behalf of the client, and you technically do not want them to, be included under the legal fee, because let's say your legal fee was $100. Your disbursement was another $100. So you actually spent for the disbursements, which is what you're now claiming from them. So let it go under the recovery of expense. Sometimes it could include HST, it doesn't include a HST. So depending upon all of those information, you could probably record them separate, and that's how you're supposed to do it. You record them separate and you deal with them separate, but they come under the same invoice. It's not that you're sending two separate invoices to your client. In the same invoice, it gets separated, and legal fee is your revenue, and disbursements are just recovery of expenses. And based on it, you'll be able to bifurcate your HST. Your HST otherwise does not get calculated properly. That's one of the reasons. And otherwise, these are the two important things to keep in mind when you're doing a fee book. One is definitely you having to differentiate between the legal fee and disbursements. Another one is the taxes. Many of us do not understand that we are probably not eligible for taxes yet. So then you make the taxes zero, or let's say some of the disbursements are tax exempt. Then you don't click on tax exempt. You just go ahead and enter the taxes with the taxes portion or excluding taxes, whatever. But end of the day, still there's some money sitting in the taxes slab because you did not click on taxes exempt. So just be careful while you're handling those taxes. These are two things to keep in mind while you are doing your invoicing. Try to maintain unique invoice numbers. Yes, of course, if you're using a program, it provides you auto-generated, but if you're doing some manual bookkeeping compliances, please make sure you're trying to definitely follow those small things and keeping it in mind to not repeat your invoice numbers, etc. Now, so far, so far we've seen these journals, ledgers, reconciliations, fee book. Moving on to other compliance documents. Now, other compliance documents, there are many of them. There's some in the accounting section, there's some in the matter section, like deposit slips, client ID verification, duplicate receipts. These are all part of matter-related documents. But however, Form 9A. Now, this is one of the most important documents other than whatever we spoke so far, the 8 or 9 documents. My personal favorite and Law Society's favorite too. If you are in Ontario, you are required to download this Form 9A or present rather this Form 9A, which is required for electronic fund transfers. That is, every time you move money out of your trust account, you would, electronically of course, you would need to produce this Form 9A. Now, EFT requires Form 9A. This some important information that goes into it. If you look at Form 9A, you'll understand. Now, if you're using program like uLaw, these are auto-generated in less than a minute. And otherwise, the cash deposit slips, the receipts, these are to be provided on receiving cash and or depositing cash. And also your other client ID verification documents and other client-facing documents, they're all available from the matter, but they also form part of the bookkeeping compliances because these are also required by Law Society. So please keep them in mind. It doesn't take too much time creating them. Again, if you're using software, they're all auto-generated. All that you need to do is pay attention to the details that's being filled out so you get the right output. And if you're doing it on your own, Law Society website has them all. And try to please match up with all new documents that are required. And let's say I have a few more things to share. I'm definitely going to walk you through the last 10 to 15 minutes on my software to show you all how you could produce all these documents from uLaw. But before that, let's see now. Let's say in the last 45 minutes that you've all heard something about bookkeeping compliances. Now, how much time do you all think it would take? Like, are we still sitting and making the double entry system manually, or you're using a computer spreadsheet, or you're using a general accounting software or a legal accounting software, which is the most advanced today? But whichever is the model that you're using, every entry today is a double entry. There's no more single entry bookkeeping here. At least that's not adopted here. And the records needs to be maintained. The information has to be recorded, and you need to take the time to make sure they are in order, which will in turn provide you a seamless accounting. Now, those hours together of time that's being spent sometimes could go meaningless if you have not followed everything that we discussed in the last few minutes. So make sure you're using a proper matter management, a proper client management, then an accounting management. Accounting, yes, is a part of, is a major part or is a vital part of your bookkeeping compliances. But if you have to keep yourself compliant, you have to start from the day one with proper contact management, matter management, then financial management to make it simple, record the data, and as and when the event happens, it might sound stupid to many of us saying that, hey, you know what, am I trying to really do this hand in hand? Are you saying that I need to record the transaction while I am working on a file? No, that's not what I really meant. What I'm saying is that try to record them at least after your work is done, so you don't lose track of the information and you're able to provide it with more accuracy, like could be the date, the amount, the reference numbers, method of payment, who it was paid to, or who it was received from. These are some 5 important details that we saw on those journals and ledgers, which gets automatically recorded in there, and the workflow keeps going on. And in turn, you're able to complete the reconciliations. As you know, you see the bank records or statements is very close with your system records. So you're able to relate more to it with all the reference numbers on it, and which will obviously make your reconciliation process more simple. That's what I'm trying to mean here by saying try to record it hand in hand or then and there, so it'll make the process more simpler for you. And last but not the least, why use a legal accounting software? Why not a simple accounting software? Yes, there's a huge difference between using both, which you will start recognizing while you're using a legal accounting software. The recording of events then and there needs to happen, and it doesn't have to be like go out of one software then go into another software. But if you're using a legal accounting, you do both simultaneously. You do your docketing, you do your accounting, both simultaneously. Financial records are maintained. Reconciliation's done. It's a very simple task. Finally, it's all about keeping yourself compliant. You're able to account all the documents, all the transactions. There's a lot of analytics that goes behind it, but end of the day, you're able to arrive at the simple stats, and it's also mostly the ease of use. You're not looking at various different softwares or various different models to do each and every work, but have just one-stop solution that helps you to kind of, have them all in one place. Let's say the ones attending today, if you're not uLaw users, I request you all to probably subscribe to the software. There's a free 30-day trial. And let us know if you have any questions in there. Let me take a quick pause to switch over to uLaw software. Now, this is the uLaw software that I am using as in the playground account. Now, we saw many ledgers, journals. I just want to show you a couple of ledgers and journals. And before I show you the ledgers and journals, I'd like to show you how the transactions are recorded. So let's take a payment receipt journal and, a payment disbursement journal. So let's take a random matter. Okay, let me just simply add a retainer in it. and the client payment, and the disbursement out of trust, and the disbursement out of general. So over here, I start off with retainer. Let's say this client provided you with a retainer. The first thing I'm doing is I want to make sure I check my bank statement, the date, the amount, method of payment, the reference number, and who I received it from. Was it the client or the client's relative or a friend, whoever paid? And of course, issuing receipt comes along with the bookkeeping compliances, but yes, you can do that later too. Click on apply. Now I've entered the receipt into trust account. Now I want to enter a receipt into general account, for which obviously I'll have to invoice, but I had invoiced and there was some invoice balance. Let's say I'm going to go ahead and enter that amount over here. So there was some amount that came in here, or I can also show you how the transfer is done instead of recording it here. Now let's say there was a amount in the trust account. I'm going to quickly raise an invoice to show you all how it works. So let's say I am doing a legal fee flat rate, and I'm doing a total amount, which is including taxes. Over here, I'd like to make this as a different amount because I want to show a different amount under the disbursement too. So 650 goes under the legal fee. Then I do a disbursement from trust, a small disbursement from trust for $70. I again choose, you have to look at all the reference numbers that I'm providing and say that was a application fee or something paid to and payments. So far done all of these. If there's an EFT, then you have to download an EFT. If I had done an electronic fund transfer, then I download. This is under other compliance documents, Form 9A. So I was able to download in no time because I've entered all of the information, such as the requisition number, the amount, who I have transferred it to, and other details. So once that's done, let's say I go back, I add another disbursement from general account. And this was, let's say, process server fee. And this was again around $104.78. Or okay, there you go. And now I'm also going to do the same thing here. Okay, if it's tax exempt, here's where you have to make sure that if it is tax exempt, you're going to enter it as this. So make sure you're differentiating between the taxes, applicable, not applicable, exempt, then also between the legal fee and the disbursement portion. So far, let's say this is being done. And let's say you had your credit card, you choose the payments, you do all of them, enter the reference number. So far, I haven't entered paid to, so I want to enter paid to. Okay, so, and Sept. So I didn't even leave one box blank there. Of course, I had entered the date, the amount, the taxes column, taken care of the method of payment, who I had paid to, then I had exported. Now let's raise an invoice, do a trust transfer, and I'll show you how those ledgers and journals looks. I'm not even waiting for the final invoice. I'm not doing the preview or anything. Just going into the final invoice. Okay, just give it a moment. Okay, that is the invoice. Again, you would see all the information on the invoice, especially with any of those, reference numbers, payouts, and other information. Let's go back in there. Let's say you're transferring the money from trust to the general. Okay. Now you're going to see how the trust payout journal and the trust disbursement journal, as well as the client's trust ledger, are going to look like. So you enter the reference number, click on transfer, and you can download a Form 9A immediately. So this is part of the other documents as part of Law Society compliances. Just look at it within less than 10 seconds. You have the Form 9A readily available with you. This will help you to enter all of this information later into your respective files, and everything is readily available here. Now, let's say you're going to go to compliance under accounts. Under compliances, you have monthly compliances. You have client's trust. Let me just do client's trust for today's date, just for this single client to show you how it works. Okay, so this was the client we worked on. I'm only going to show you the amount that was, and if there was anything received into it, or the amount just taken out of it. So because I had entered for today's date, there was nothing. If I had entered just for this client, there was one thing that was missing, just to show you all. Client's trust. Let me take out today. Instead of that, I'll do the week, and I'll remove this, and I'm going to do it for Tennessee and download it. Can even drill it down to the level of information. So you've got the retainer on for so much amount. Okay, all the receipts are here. This is a client's ledger. Okay, these two are the receipts, that is the trust deposits. And then you have all of those disbursements, especially the ones that we added today. Okay, which is over here. That is paid out of trust to the general, which is trust transfer. This is trust transfer. This was trust transfer for the legal fee. The one below was trust transfer for the disbursement. Now, whatever was in the trust has been taken out. So end of the day, your balance in trust is zero. Now, let's go into the client general and see what has happened in here. Just for today, for this client, you would see that the $650 was transferred to the general account, or $680. There was a $680 as a legal fee. There's the reference numbers, the breakup of legal fee disbursement, and further breakdown of what is the taxes portion included in this. If there is any taxes portion included, they would be shown in the bracket, which is billed to the client. And you have corresponding payments and the balance owed. When you go back into uLaw, let's say you want to drill it down further. Let's say you're downloading the journal for this particular client. Now, there are clients' trust receipt journals. There is no receipt journal for them for today. Let's say you want to do a client's general receipt journal. If there was anything for just today, you would see them, which is the amount that was transferred from trust to the general. And you also have the general receipt journal, general disbursement journal, which is over here. All the payments that went out of the general account or the trust account. This one is client's trust disbursement journal, so which means the amounts taken out. And over here, what all you could see? You could see the method of payment, of course, date, method of payment, what is it that I have paid to, and the matter and file numbers are auto-generated. and also the amounts and whether it was with taxes, without taxes, everything inclusive will be calculated. Once that's done, lastly, you'd also see the general disbursement journal over here. Let's just do that. And you will see if there's anything dispersed out of general, which is just the process server fee for the disbursements that we did. And it is recorded here, whether with taxes, without taxes, and total goes from there. Okay. And most importantly of all is those method of payment, who you have paid it to, and other info that comes along with it. Okay. And let's go back in there. Now I just want to download a fee book to show you all how the legal fee, the $680 looks like. Over here, it has a legal fee and a disbursement and the total. There's no HST on this portion. They're completely tax exempt because I have made HST as 0% for this file. If you're all seeing, I've made the default because I was not eligible to charge taxes yet. So I made my taxes as 0. So there's nothing recorded in here. That's what it is. Lastly, when you go back to see how the reconciliation works, you'll see all of those transactions in there. Trust reconciliation, enter the balance as per the bank statement on the top. Step number 1 is to enter the date for the month end that you're doing. Then you have the balance that you look at the bank statement and enter. Then you clear your accounts. Remember, the ones that are outstanding, you have to leave them uncleared. And lastly, if there's any bank error, you have to enter them and you would see the reconciliation date on the top. That's how a reconciliation works. Similarly, for the general account too, that's how it works. And I think we're mostly to end of it. I'd like to just see if there's any other document that I'd like to show you all, but in the meantime, I'm opening the chat window for many questions that you all have. Any questions you have, please do enter it on the chat window and I can show you those documents over here. Other than that, there's also general reconciliation, and if you have multiple accounts of trust, reconciliation over here. There's expense book also over here, which is also part of the bookkeeping compliances. Today, I only probably expended one thing, which was that 104.78, which is the process server fee. So it comes under the expense book. If you had entered it with the taxes portion, whether it's HST or GST, PST, everything would be calculated and provided on top of it. Okay, so I'm going to just open the floor to all of you. And just to remind everyone here that today was a CPD session. It's a 1 hour of professionalism CPD credits. And the attendance link is entered here from time to time. Just to keep the recording short, I'm going to stop the recording soon. But we are going to hang out here to answer all your questions. If you have any questions, please start entering here on the chat window, and we'll be happy to walk you through it. In the meantime, whether it's the bookkeeping compliances or any other questions in regards to it, I'll be happy to take a look at it, and we could definitely share some views. But try to keep in mind everything that we discussed today from the top, starting with journals. How do you go about recording the transactions religiously without leaving even a single field or column or data? incomplete, to ledgers, to reconciliations, to other documents, on and on. But these are all interconnected. End of the day, you're not entering the same information 10 times, but this information is entered only one time to fetch these 10 documents. So please keep that in mind and try to achieve a complete bookkeeping compliances than an incomplete one. I hope you all benefit from today's session and you enjoyed it. Any questions, I'm going to open the chat window here to keep looking at them. I'm also going to simultaneously stop the recording. But I would definitely answer all of them. I'll be hanging out for a while. Do keep shooting out your questions over there. Thank you all for joining in once again, and have a wonderful day. There are more announcements, so I request you to hang tight for a couple of minutes.